Get ready for the biggest headlines of the day. Tesla shares are soaring 3% as Elon Musk sets to join President Donald Trump on a crucial trip to China. This development is sending massive ripples through the market, fueling a rally that has seen Tesla shares jump over 30% since early April, all driven by optimism surrounding the company's autonomous driving ambitions and its growing footprint in the Chinese market. We dive into what this high-stakes pairing means for Tesla's future and what investors need to watch for next.
Tired of dropping your phone or struggling to hold it with one hand? The PopSocket's Pop Grip gives you a secure grip, works as a phone stand, and even lets you swap the top for a fresh new look. Simple, useful, and perfect for everyday phone use. Click the link in the comments to grab yours on Amazon.
Next up, we look at big moves in ownership. Representative Gilbert Ray Cisneros, Jr., recently made a significant purchase, buying shares of Tesla, Inc., on April 14th. We break down the details of this trade, looking at the market context, the company's recent earnings report, and what major institutional players like Narwhal Capital Management and China Universal Asset Management Co. Limited are doing with their holdings in the electric vehicle producer. We then shift our focus to the analyst landscape. Research analysts are issuing their predictions for Tesla's upcoming earnings, and we see a mixed picture emerging. We examine the specific estimates from Zacks Research and the range of ratings from firms like Bank of America and Capital World Investors, helping you understand the current consensus and where the market is headed for Tesla stock. Finally, we look at the massive industrial push reshaping the manufacturing world. Tesla is planning a colossal $20 billion semiconductor manufacturing facility in Austin, Texas, signaling a huge wave of industrial capital investment across the U.S. We explore the 149 new industrial projects being tracked, highlighting key investments in states like Texas, Ohio, and Michigan, and what this means for the entire industrial sector. Stay with us for more analysis. Tesla shares surged by 3% following reports that Elon Musk is set to join President Donald Trump on an upcoming trip to China. This development has intensified investor excitement surrounding the potential synergy between the company's CEO and the U.S. president as they focus on Tesla's crucial Chinese market. This news contributes to an existing rally that has propelled Tesla shares up over 30% since early April, driven primarily by optimism regarding the company's autonomous driving ambitions and its expanding presence in China. Tesla's Shanghai Gigafactory is a cornerstone of its global operations, accounting for over 50% of its worldwide vehicle output, and China stands as Tesla's second-largest revenue market. The significance of Musk's engagement in China was underscored by a previous visit in April, where he reportedly secured tentative approval for Tesla's full self-driving software within the country. That single trip caused Tesla shares to soar by 18%, reaching $198.87. Securing FSD approval in China remains a complex process, involving navigation of data security laws, mapping restrictions, and a regulatory framework operating on its own schedule. Coinciding with this focus on China, reports suggest Musk postponed a planned trip to India to concentrate on Tesla's operations there. The substantial gains seen in Tesla stock since early April reflect a fundamental revaluation of the company's autonomous driving potential. Every positive development in the Chinese market, including FSD approvals, manufacturing expansions, or high-level political engagement, reinforces the bullish outlook. Given the structural dependence of Tesla's success on its Chinese operations due to the pivotal role of the Shanghai Gigafactory, investors are advised to closely monitor the outcomes of the upcoming trip. Key areas for scrutiny include concrete timelines for FSD deployment, data localization requirements, and any new manufacturing commitments, as the 18% surge from the April visit has established a high benchmark for future performance. Representative Gilbert Ray Cisneros, Jr., a Democratic member of the U.S. House representing California's 31st Congressional District, recently acquired shares of Tesla, Inc., Nasdaq TSLA. In a filing disclosed on May 8, Cisneros reported purchasing between $1,001 and $15,000 worth of Tesla stock on April 14 through his 150 Main Street Trust, Bank of America account. The transaction comes amidst ongoing market activity for Tesla. As of the reporting date, TSLA opened at $444.92, with its 50-day simple moving average at $383.61, and the 200-day simple moving average at $418.25. The stock has traded within a 52-week range of $273.21 to $498.83. Key financial metrics for the company include a market capitalization of $1.67 trillion, a price-to-earnings (PE) ratio of 408.18, and a beta of 1.79. Tesla's recent quarterly earnings report, released on April 23, showed the company posted earnings per share (EPS) of 41 cents, slightly exceeding the consensus estimate of 39 cents. Revenue for the quarter reached $22.39 billion, compared to analyst estimates of $22.96 billion. The company reported a return on equity of 4.89% and a net margin of 3.95%, marking a 15.8% revenue increase year-over-year. Institutional investor activity remains significant, with several major players increasing their stakes. Narwhal Capital Management grew its position by 32.8% in the third quarter, while Crestwood Advisors Group, LLC, boosted its holdings by 34.7% in the fourth quarter. China Universal Asset Management Co., Limited also raised its stake by 8.8% during the third quarter. Collectively, hedge funds and other institutional investors control 66.2% of Tesla's stock. Analyst sentiment remains mixed. Following recent reports, BNP Paribas Exane upgraded Tesla from an underperform to a neutral rating on April 27, while Robert W. Baird lowered its price target to $522 but maintained an outperform rating. Other analysts have issued various ratings, resulting in a consensus rating of hold and a consensus price target of $398.42. Insider trading activity has also been noted. Over the last 90 days, company insiders sold 80,213 shares valued at $30,851,105. Specifically, Director Kathleen Wilson Thompson sold 26,409 shares on April 30th, and CFO Vaibhav Tanja sold 2,264 shares on March 6th. Tesla, Inc., founded in 2003, is a vertically integrated company focused on electric vehicles, energy generation, and energy storage, aiming to accelerate the transition to sustainable energy. The company's automotive segment includes battery electric vehicles and related services. Investment sentiment surrounding Tesla, Inc. TSLA remains mixed, with recent analyst revisions and varied institutional activity shaping the stock's outlook. Research analysts at Zacks Research have recently lowered their Q2 2026 earnings per share estimates for Tesla, forecasting 14 cents per share, down significantly from a prior estimate of 27 cents, maintaining a hold rating on the stock. The consensus full-year earnings estimate currently stands at $1.25 per share. Zacks also provided detailed forward estimates, projecting earnings through 2028. In contrast, other investment banks have issued divergent recommendations. Bank of America initiated coverage on March 4th with a buy rating and a $460 price target. Concurrently, Canaccord Genuity Group raised its target price to $450 with a buy rating, and President Capital increased its target to $428, also citing a buy rating. However, Truist Financial issued a hold rating with a reduced price target of $400, while DZ Bank upgraded the rating from sell to hold with a $385 target. Overall analyst sentiment shows a split, with 19 analysts rating the stock a buy, 17 issuing a hold, and 5 issuing a sell. The current consensus rating across tracked data remains hold, with an average target price of $398.42. Trading data indicates that Tesla shares opened at $444.92 on Tuesday, trading near its 50-day moving average of $383.61, though the 200-day moving average is at $418.25. Key financial metrics show a market capitalization of $1.67 trillion and a price-to-earnings (PE) ratio of 408.18. Recent quarterly performance showed that Tesla reported 41 cents EPS for the last reported quarter, surpassing the consensus estimate of 39 cents. Revenue reached $22.39 billion, marking a 15.8% increase year-over-year for the same period. Insider activity has also been noted. Director Kathleen Wilson-Thompson sold 26,409 shares on April 30th, and CFO Vaibhav Tanja sold 2,264 shares on March 6th. In the last 90 days, corporate insiders have sold 80,213 shares, worth approximately $30.85 million, representing about 19.9% of the company's stock ownership. Institutional interest remains strong, with major players like Vanguard Group Inc., State Street Corp., and Geode Capital Management, LLC, increasing their stakes in the stock during the fourth quarter. Norges Bank also acquired a new position valued at approximately $17.13 billion. Tesla continues to operate as a vertically integrated mobility and clean energy company, focusing on electric drivetrains, battery technology, and renewable energy products. While the stock navigates analyst divergence and ongoing market scrutiny, the company maintains a significant market presence. Industrial capital investment is surging, highlighted by Tesla's planned $20 billion semiconductor manufacturing facility in Texas, marking a significant trend across the industrial sector. Industrial Sales Leads released its April 2026 capital project spending report, revealing 149 newly identified industrial projects spanning expansions, new construction, renovations, and equipment upgrades. This wave of investment is heavily concentrated in key manufacturing hubs including Indiana, Texas, Ohio, Alabama, and Michigan, with decision-makers actively procuring necessary equipment for these ventures. Analysis of the 149 projects shows a strong focus on production capacity, with 139 new manufacturing production facilities identified. The scope of activity is diverse, featuring 52 new constructions, 35 expansions, and 68 renovations or equipment upgrades, alongside 14 plant closings. Demand for industrial equipment is geographically distributed, with Indiana, Texas, Ohio, Alabama, California, Michigan, Pennsylvania, Illinois, Iowa, New York, and Georgia leading the demand for project managers. Top locations for industrial manufacturing projects included Indiana 12, Texas 11, Ohio 9, and Alabama 8. Several major projects are drawing attention. Alabama is planning a $4 billion expansion for an automotive manufacturer in Vance, and an electronic component manufacturer is seeking approval for a $500 million facility in Guntersville. In other notable developments, a solar panel manufacturer in South Carolina is renovating a facility for $350 million, and a kitchen appliance maker in Iowa is expanding by $196 million. Michigan is also slated for a new automotive component facility, and Ohio is undertaking a renovation of a home appliance plant. The largest identified project is Tesla's $20 billion semiconductor plant in Austin, Texas, slated for completion in 2028, underscoring the massive scale of current industrial capital deployment. Across the board, industry leaders are actively moving forward with significant investments in modernizing and expanding their manufacturing footprints.